Right, information number 6. The financial statements were finalized and the net profit determined. You may assume that the income tax will be assessed at 30% of the profit before tax figure. Now in practice there's a lot of deductions and things that you can claim for income tax and or from your earnings, and things that you should include in earnings. But we're just for this question and for most of your course, you can assume that the tax will be calculated at a percentage of the profit before tax figure. And then it says here, no final payment has yet been made. Right, so that means we have not actually paid this final assessment of the tax. Right, so we're going to have to get back to this one once we've determined our net profit. So after we filled in all our adjustments and we've calculated our totals and our subtotals here, we're going to calculate our income tax figure based on this profit before tax figure here. Alright, but we can't do that right now. All we know is it's going to be that figure multiplied by 30%. So we can say multiply by 0.3. And we're still waiting to figure out what is that figure. So we'll get back to that one. Alright, then information number 7. Computer equipment needs to be depreciated at 33.33% using the straight line method. This is similar to adjustment number 4, so I'm not going to go through the detail. But again, the same principle. We're using an asset. Because we're using an asset, specifically a fixed asset, we're going to have depreciation. Alright, and right, so let's just quickly do that. We've got depreciation, alright, which is an expense which is increasing because we're using the asset, and my asset is going to decrease. The specific line item is fixed assets. Alright, let's quickly calculate the amount. It said here 33.33% of the cost because it's a straight line method. So that's 39,000 Rand. There was no residual. Multiply by 0.3333 times 12 over 12 because we had the computer for the whole year. And if you calculate that, you're going to get 13,000 Rand if you round it off. Alright, so we can fill this in. My asset is going to decrease with the 13,000 Rand. You can do them in any order. You can do the income statement first as well, whichever you wish. And my depreciation is going to increase with the 13,000 there. Alright, that is number 7. Right, question number 8, or additional information number 8 rather, says the 12-month insurance policy, okay, so we know it runs for 12 months, was taken out on the 1st of December 2012 at a monthly premium of 1560. The policy has been fully paid, so we've paid for the full 12 months from 1st of December 2012 until 12 months later. So whenever we're given dates, we need to draw our timelines. So the first thing we need to do is establish our financial year, which runs from the 1st of July 2012 all the way up until 30 June 2013. And the information says that our insurance policy was taken out on the 1st of December 2012, which is around about a year. Okay, so there we go. There we take out our policy. It runs from December, 1st of December 2012. It runs for 7 months till we get to our year end, and then it runs for another 5 months till the end of the policy, which is 12 months, and that will be on the 30th of November 2013. Now the question is, how much of this insurance policy relates to the financial year? Well, that's easy. It is this 7 months year. Okay, so we have effectively, the question says that we have fully paid the policy of 1560 for 12 months. So that means we have actually paid 1560 times 12. Right, if you calculate that, you're going to get 18,720, and that has been fully paid, and it has been included in my trial balance figure here, 18,720. That is what has been paid. Question is, how much should have been paid, and how much of the service has been used in the financial year? And that is only this 7 months. So this was the paid portion here. Okay, the amount that was actually incurred is only this 7 months, which is 1560 times 7, which is, that is 10,920. So the adjustment we need to make is for these 5 months here. Alright, so the paid portion was the full 12 months, right? The portion that we actually incurred was only these 7 months. Remember, we've only used the insurance services from the 1st of December to the 30th of June by the year end. We've only been able to use 7 months. So the portion that we've paid in advance is this 5 months here. And that is our adjustment. Alright, and that specific adjustment is called prepaid expenses. Now the question is, what is this adjustment of prepaid expenses? It is going to be an asset. The reason it's an asset is because we've paid for the insurance services, but we have not yet used it. So this other entity effectively owes us those services. Asset because services are owed to the entity. Okay, so my asset is going to increase. My expense, insurance, which is 18,720 currently, that is what has been paid, needs to decrease to 10,920. So my expense, specifically insurance, needs to decrease to this amount so that we get to 10,920. So the adjustment that we have to pass is the 18,720 minus the 10,920, which is equal to 7,800. Alternatively, you could have just said 1560 times 5, and you're going to get to the same amount of 7,800. Alright, so my asset needs to increase and my expense needs to decrease. Just quickly, which specific line item needs to increase here? It's going to be, is it a non-current asset or a current asset? Well, because we're going to get this service within the next 5 months, right immediately after the year end, this is going to be a current asset, and it's specifically going to fall under trade and other receivables. Alright, so we go to our financial statements and we can include that there. Our current assets need to increase by 7,800, and my expenses, the insurance, needs to decrease by 7,800 so that we can get to our 10,920. Good. Our final transaction, or our final adjustment rather, is number 9. On the 30th of June 2013, that's the last day of the financial year, the profit and loss was determined and a final dividend of 60 cents per share was declared by the directors to the 300 shareholders. Okay, listed in the company share register. The dividends have not yet been paid. Right, so the couple of key things here. Number 1, we know that the dividends have not yet been paid, which means that we do have a liability. Alright, so we're going to have a liability that increased because we've declared the dividends, but we have not yet paid it. So our liability is going to increase. And the specific liability is called shareholders for dividends. Alright, and that's going to form part of the trade and other payables line item. Okay, so that's the one part of this leg, trade and other payables line item. The other part of this leg is going to be a distribution of profit. All right, so my profit distribution is going to increase, so I'm going to lose some of my retained income. So my retained income is going to go down with the distribution of the dividends. The question, however, is how much is this dividends that we are distributing? And the information said that we are distributing dividends at 60 cents per share, right, to the 300 shareholders. Now, this to the 300 is just there to confuse you, right, because the dividends is declared at 60 cents per share. So if you look at the number of shares that is currently in issue, where can we find that? If you look on your trial balance, you see that there's 360,000 rand or 360,000 shares in issue. So the dividends is going to be 360,000 shares times the 60 cents per share, and that is going to give me a 216,000, and that is the dividends that is going to increase my liability because we've not yet paid this dividends, and decrease my retained income. Right, so let's quickly process that. We're going to minus 216 on retained income, and we're going to increase our liability with 216,000 rand, which is the shareholders for dividends. And we are done with our adjustments. We've processed all the adjustments. Remember what we did? Every time we processed it in two places, and to be in line with the double entry principle. And now we are ready to perform step 4 and 5, which is to enter the final amount in the correct column, all right, and then calculate the subtotal and totals in the financial statements. Right, so you can go ahead and fill in the final column in your financial statements. What you'll need to do is simply look at your calculation on the left and fill in your final figure here. So for sales, there was no adjustment necessary, so it's just a trial balance figure. Also important to remember is if there is an expense in the income statement, you need to indicate that with a minus. So we're going to minus our cost of sales, 761,143. Our gross profit is then going to be the first subtotal, which is sales minus the cost of sales, which is going to 570,857. Our other operating income is the total of all our other incomes. Our rent income, 442 minus the 295 is going to 147,600, which, if you will remember, was the portion that was actually earned during the financial year. So our adjustment is correct. Commission income, 814,914, and you can then add these two together to give you your total other operating income. There we go. My gross operating income is then my gross profit plus the other operating income, and if we calculate that, 1533371. Alright, then we can do the same for our expenses. You can add up each line item and fill it in, and then total all your operating expenses. So I'm going to do that quickly. You can do that yourself. Right, that then comes to 901,357. So my operating profit and loss is then my previous subtotal, which is the gross operating income, minus my operating expenses. Remember to include the minus for your expenses. That gives you the total 632014, and that is a profit, so we're going to include that as a positive. If it was a loss, you'd have to indicate that with a minus or a bracket. Right, but on this computerized format, please don't use brackets, use the minus. Interest income was 0, so we can leave that blank. Profit before interest expense is then going to be the operating profit plus the interest income, which is going to be 632014. My interest expense as well was 0, so I can leave that a blank. My net profit before tax is going to be the same amount. Alright, and then we can calculate my income tax. You remember we said that we're going to come back to additional information number 6. We assume that the income tax is 30% of profit before tax. So we can say 0.3 times my profit before tax, 632,014. That's going to give me my income tax expense of 189,604. Important again here that we indicate that it's going to reduce my profit by putting a minus in front, and we can finally calculate our net profit, which is going to be the net profit before tax minus the tax. It gives me my final net profit 442,410. Right, so what do we do with this net profit? You will remember, hopefully, that the net profit in the income statement is, if you remember the example with Thabo, who starts off with a certain amount in his wallet, then he goes to school and he earns some money during this school day, and at the end of the day he takes the 5 rand and the 10 rand, etc., and he puts it back in his wallet. Now the income statement is going to give me this amount that was earned during the financial year, and I now need to take this profit and put it back into the wallet, which in our example is the balance sheet. Right, and the specific line item is the retained income line item. So I'm going to go to my retained income, and my retained income needs to increase by this profit of 442,410. So I can say that is plus. Alright, and that is how the income statement links with the balance sheet. It is included in my retained income line item. And then we can go and do the same for my balance sheet. We can total each line item, and we can calculate the subtotals for non-current assets, current assets, total assets, and the same for shareholders' equity, non-current liabilities, and current liabilities. So I'm quickly going to do that. Oh, one thing that we almost forgot. Remember we said for every adjustment you need to record the adjustment in 2 places. My income tax, we only recorded it in 1 place. The other place that we need to record this is against the place where we recorded our SARS provisional tax. And in this case, the SARS account was recorded against the trade and other receivables account. The reason for that is that SARS was a debit balance, which means they actually owe us money. Right. However, they only owed us money because the final tax had not yet been determined. Alright, so before the final tax was determined, here is how the picture looks. We have made some provisional payments during the year, and as a result of that, SARS owes us money 190,774. Right, but this is, as I've said, this is before the final tax has been assessed. Now the final tax gets assessed, and it is determined that the actual tax that we should pay is, well, we've just calculated it here, 189,604. Alright, so we currently, before the final tax has been determined, we've got 190,774 that SARS owes us. Then when our final tax is determined at 189,604, we see that we've just got slightly more money that SARS owes us than the money that we actually supposed to pay them. Right, so the difference between these two is going to result in either a debit or a credit. Remember, the 190 was a debit. This 189, the actual tax that was assessed, is going to be a credit to the SARS account. Right, so we're going to end up with a net debit because our debits is slightly higher than our credits. So SARS is still going to end up owing us money. So the 189,604 is going to be subtracted from the trade and other receivables line item. If for example, this tax that was assessed was greater than the 190, maybe it was 200,000 rand, then we would have ended up with a net credit, and SARS in that case would then be under trade and other payables. Trade and other payables. However, in this example, our debits are greater than the credit that resulted from the tax that was determined, so we're going to end up with an amount under trade and other receivables. As you can see, this 189 has eaten into this receivable, so the receivable has been decreased. So I'm going to decrease my receivable with the 189,604. Good. And once we've done that, we've now included all the line items that we need to include and all the adjustments, and we can simply go and total up each line item and determine the subtotals. So I'm quickly going to do that.